Hi. So good evening everyone. So I'm going to explain about what is capital market and why we called capital market. That is also important, right? I'll explain that word so that whenever you would see any question around us is like what is capital market and what do you know about it, so you will confidently answer to it. So what I would expect is like one comment, and share this content with others. So see this, how I have that explain about what is capital market and all. So if you say capital and market, both are different words. First of all, we'll try to understand the meaning of that capital word. Capital, it means fund. When we talk about capital, it means it's a fund. Right? Who is looking for a fund? Of course, companies are looking for a fund. Companies. Which companies? It can be private companies or it can be public limited companies. So it means when we talk about capital word, capital, it means it's a fund. Who is looking for a fund? Of course, companies looking for a fund, or businesses looking for a fund, or I would say governments or municipal corporations, they are looking for a fund, right? Because without fund, how can you expand your business operations? How means we won't be able to scale it up if you don't have a funding, right? And that's what companies as well as government. It can be state government or it can be central government. If they want funding, then they can raise funding, right? They can raise funding, but how they can raise funding? If I talk about companies, companies can raise funding through debt instruments as well as equity. Equity, it means shares, right? Shares, you must have heard about this word like shares. Shares, it means you can directly buy and sell securities through your broker's demat account, or maybe demat account or a trading account. You can buy and sell the securities, correct? So that shares means your equity. Again, equity has a two types. One is common and another one is preference equity. If you want in detail discussion on equity or types or dividend and everything, you can post in comment section. I'll definitely design insightful or conversational content on common equity or preference equity. But yeah, so if I talk about fundraising, it means, see, you cannot raise fund without sources, and equity is one of the key source where companies, even if it is private or public, both can raise capital through equities. It can be common or it can be preference equities. And now another source which I mentioned earlier, which is a debt. Debt, it means it's a borrowing, to borrow money from the institutions like bank, hedge fund houses, private equity houses, mutual funds, retail investors, or it can be HNI investors who are willing to take a risk or who are willing to take a stake in your business. They'll invest through loans as well as bonds. So now I hope you got the answer about word of capital. And now if I talk about government, see, government comes with government bonds, government treasury bills, right? Government comes with notes, right? Government also announce it. But if you see, if the government needs a funding, then government can raise funding through government bonds, treasury bills, notes. And if any public or private limited companies, if they are looking for a funding, then they can come up with either equity or maybe debt instrument fund raising strategy. Now, so very important statement is that I'm gonna try to quote here. If any institution, even if it is a government, private or public institutions, if they're looking for a funding, then they'll announce or issue their securities or instrument on a platform. On a platform, it means, I would say, on a let's say place or platform. So that place or platform, you can call it as an exchange, where that platform help to exchange the securities through buy and sell. So that platform you can call it as a market. Market, it means it is a platform where investor, buyer, seller, issuer, governments, they come together and then they deal or execute trades in different financial instruments. So that place you can call it as a market, and combinedly you can read which is capital market. If I talk about exchange of securities platform, there are two platforms. One is primary and another one is secondary. Primary, which is the invisible place at any point in time or any place nearby you, or maybe anywhere, if you buyer and seller, if they meet together, negotiate on terms, and if they execute in the trades, so that market becomes OTC market, or I would say even primary market as well. And if I talk about secondary market, it means where directly issuer of the security, like government of India, is not selling securities. So it means the person like who is or who have purchased securities from the IPO event or initial offering events, they can buy or they can sell the securities in the secondary market, right? So where public, so it means public or investors, they buy and sell with each other. So that marketplace, you can call it as a secondary marketplace. And we have a reputed stock exchanges like NSE, BSE, and there are many more others as well. So I hope now you got the understanding about capital market. I'll quickly explain how capital market works. Now if I take the example, let's say there is a person A, right? A, it means it's an entrepreneur who is running this business. Let's say who is running this ABCD Limited. Who is running this ABCD Limited, or it can be public or private. So depends. Let's say ABCD, a person is running this ABCD institution. Let's say A has oil business. So it means this company is into the oil business. Now, if you, let's say, compute the value of total assets of ABCD Limited, assets value is around $1 lakh. So this, let's say, A person or Bhai Sahab is looking for a funding. If A is looking for a funding, A can create or A can, split this 10,000 assets into units. Units, it means shares. That each units you can call it as a shares. Okay. So that A will compute it with the help of investment banks, because investment banks actually works as a underwriter as well, or where they offer even merger acquisition services also. So that's what after the calculation of or computation of value of the organization, that IB or research firms will help A to measure or split the assets into different small units or denomination, so that each denomination we can call it as a shares or securities. So here if you see, I have just see this number, it can be random. It's not something where scientific process that you need to follow to compute that numbers. No. Here if you see 1 lakh is the assets and 10,000 which is shares, which I have considered. So $10 shares price would be after computation. Right now you know the face value of your securities, and this face value you can sell it out, or you can transfer, or it means A can transfer it to the hedge funds through security purchase agreement, or maybe private equity firms through PPM. PPM, it means private placement memorandums, or maybe that A can sell out stakes or dilute his or her stake to the retail investors like us, BC, right? So here if you see, I have taken an example. Let's assume it's hypothetically this guy is looking for 10,000 capital, 10% dilute, it means 10,000 USD. So that becomes 10%. So A will sell 1,000 shares at 10 rupees, 10 USD to the hedge fund, mutual fund, maybe let's say different investors, right? And then that investors will invest fund or transfer money to the company or A in exchange of 1,000 securities, right? So this is how your funding works. So it means A will hold now post funding raising 90% equity and rest 10% equity. The other counterparts like hedge fund manager, private equity manager and retail investor will hold in this particular company. Now if you see, A was looking for a funding, investor transfer funding to the ABC Limited, and this guy will able to run the business operations successfully, or maybe whatever purposes, then A will utilize that money for operating activities and generate more revenue. And if A generate more revenue, then it means ultimately that will added in the values of securities as well. So it means company's capital will high or increase or up ultimately, right? So question would be like, what if sir, what if the, let's say these are the investor and if they are not able to pay, then what could be the other alternative? Other alternative could be where A can reach out to the banks. Banks can also provide funding. So depends on the